This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Right, well, if I was going to predict any particular assessable benefit that would be asked of you within an examination question, it would be this one: the provision of a car made available for the private use of an employee. So notice there we said made available for the private use of an employee. So the first point made, if there is no private use of the car, it's only used for business purposes, then there is no taxable benefit. Now that is most likely to be seen there, down at the bottom of this page, where there is something called a pool car that is provided and of which this particular employee has had the use of it. Well, what do we mean by a pool car? Use of a pool car does not result in a company car benefit. What is it? One provided for the use of any employee to use purely for business purposes, and that particular car is kept at the business place of work. So no employee is allowed to take that home with them at any evening after work there. That is housed, its garage at the place of work. So it's there available for any employee who needs to go out on company business, pick up the keys and off you go, bring it back at the end of the day, and again that is a pool car. So if there is such a provision, there is no assessable benefit. But more usually, and certainly in an exam question, what we're going to see is that basically the employee in question has been provided with a company car. And on that basis, there is going to be an assessable benefit that we will compute in the following way. Now, there will be two things that we need to determine immediately within a question, because the benefit is a percentage of the car's list price. So there's the first figure that we must establish, the list price. And what we're told here is the list price includes the cost, the price of any accessories fitted to the car when it is purchased, and that list price is reduced by any capital contribution from the employee, subject to a maximum of £5,000 deduction. Now, it might seem odd that an employee may contribute towards the cost of a car, but you imagine that maybe the employer has a rule that employees in this particular category may be provided with a company car to the cost of £20,000. But maybe the particular car that the employee wishes to have is one that costs £21,000. Well, what the employee might be able to suggest to the employer is that, look, I'd like the one costing £21,000, your limit is £20,000, so I, the employee, will pay £1,000 towards the cost of that car. Now that's a capital contribution that's paid when the car is purchased, and what do we do with that? Up to a maximum such contribution of £5,000, we will deduct that from the list price. Now notice again we are using the list price rather than in fact the cost of the car. So normally two figures will be provided to you in any exam question. They'll tell you what the cost of the car was and what the list price. Any capital contribution made by the employee towards that cost is an allowable deduction, but what you're deducting it from in determining the assessable benefit is the list price. So in the question, go find the list price, check out whether there's any original capital contribution that has been made by the individual to the company for the provision of that particular car. Now, once you've got that list price, as reduced by capital contribution if necessary, we then need to apply a percentage to that to give us the assessable benefit. And that percentage is going to be based on CO2 emissions. You may recall that when it came to looking at capital allowances, the asset that gave us the most interest, shall we call it, was cars, where the amount of capital allowance available was dictated yet again by the CO2 emissions. The lower the CO2 emissions, the higher the amount of capital allowance the tax deduction permitted. So it will be the case now in relation to the provision of a company car to the employee, that the lower the CO2 emissions, the lower will the percentage be to apply then to that list price of the car. Therefore, the lower the assessable benefit. But the bigger the CO2 emissions, then the higher that taxable, that assessable benefit will become. Okay, now thankfully the table then provided here for you will be provided also to you within the examination. You will not have to memorize the content of this table. So what therefore will we be told? Right, CO2 emissions, again based on grams per kilometre. These figures, again remember, provided to you. 50 grams per kilometre or less, a mere 5% of the list price will be the assessable benefit. If we then step it up from 51 to 75 grams per kilometre, we go up to 9%. From 76 to 94, we jump all the way to 13% as the basic percentage to apply. Notice that this refers to a petrol car. Should it be a diesel car, note here, the percentage rates are increased by 3% for diesel cars, but not beyond. You haven't seen it yet, but there is a maximum percentage that we'll ever go up to, which is 37%. So if, for example, here, a company car with, let's say, 70 grams per kilometre CO2 emissions was provided to the employee, then you'd start with your basic figure for, did I say 70 grams? I think so. 70 grams per kilometre, you'd start with 9%. But if you were then told that this was a diesel car, you'd add on a supplement of 3%, so you'd use 12% of the list price in determining your assessable benefit. We then get to a threshold of 95 grams per kilometre. Now that's your basic benchmark, your basic threshold figure. Below that in terms of emissions, there is a lower percentage. Above it, there will be higher percentages up to a maximum of 37%. So how do we move from that lower figure, 14%, or of course if it's diesel plus 3, 17%? How do we move from that through to a maximum 37%? Right, if we see that a car has CO2 emissions in excess of 95 grams per kilometre, what do? We start with 14%, our threshold figure, and we add an additional 1% for every complete 5 grams per kilometre above the 95 gram per kilometre level. Now remember, all of these figures, all of this information is provided to you on your rates and allowances page, so you will not have to memorise it. Thank goodness. But we do then have to know how to calculate this benefit. So for example, if you were told that the CO2 emissions of the car was, say, 134 grams per kilometre. Now clearly 134 is more than 95. So we'd be starting with the 14% and then adding to that. Now how do we get this additional 1% for every complete 5 grams per kilometre above the 95 gram per kilometre cut-off threshold level? What you do, pick up your figure, here 134, and round it down to the nearest 5 grams per kilometre. Round it down to the nearest multiple of 5. Well, rounding down therefore from 134, nearest multiple of 5 will be 130. So we rounded down to the nearest multiple of 5, that is 130, minus what was the threshold figure, it was 95, and divide by 5. So the excess, 130 minus 95, is 35, divide by 5 will therefore equal 7. That's an additional 7% to add to, either, as we said, the 14% figure there, or had it been a diesel car, we'd be adding the 7% to 17%, 14 plus 3, the supplement for diesel cars. So if this is a petrol car that we're dealing with, 14 plus 7, 21% is the figure that we would use. If it's a diesel car with these grams per kilometre, then it will be 24% plus 3 there for the diesel supplement. Now, of course, as that grams per kilometre figure gets ever higher, then for each complete 5 grams per kilometre that we add to it, then there's going to be another 1% point to add to the percentage to use against your list price. But as we've said, there'll come a point where that calculation, inclusive if relevant of the 3% supplement for diesel, goes above 37%. If it does, we cap maximum there 37%. Okay, now all of that information provided there is provided to you on your rates and allowances page. If you haven't already done so, I'd ask you to go to your rates and allowances page at the start of your course notes and have that available. Keep that by your side because we're going to be using that in example 4 in a few minutes' time. Okay, so remember the two things you need to determine: the list price and the CO2 emissions. And in getting the CO2 emissions, we then need to know, is the car petrol or diesel? Right. Section 4, reductions that are available in the assessable benefit. The car benefit is proportionately reduced if the car is unavailable for periods of at least 30 days of the tax year. And also a reduction, and it's more likely, where the employee makes a contribution to the employer for the use of the car. So these two possible deductions. The first one, if a car is unavailable for periods of at least 30 days of the tax year. So if the car was involved in an accident and is off the road for, say, 2 months, then that is at least 30 days, and on that basis, therefore, you would reduce your annual assessable benefit by 2 months, by 2/12 there. But much the more likely one is that the employee is required to make a contribution to the employer in relation to being allowed to have a private use of that company car. Now that is a figure that would be given to you. It may be given as a monthly figure, an amount paid per month. It may be given as an annual figure. But whatever is the figure for the year, that is the figure then to deduct. What we must also remember is that the benefit that we're computing, pretty much like with the other assets available for private use that we saw earlier, this is an annual benefit. So again, if, for example, you only joined the company on the 1st of January 16, from which date you were then allowed a company car, you had the company car for the 1st of January 16, well, in the 15-16 tax year, that is only 3 months. Therefore, using the list price, using the CO2 emissions, apply the percentage to the list price, that would give you an annual benefit. You would then time apportion that for the amount of the tax year for which the car was available. If that had been made available to you on the 1st of January 16, then in the 15-16 tax year, there's just 3 months. 3/12 of the annual figure would be the assessment to include in the 15-16 computation. Not that I would think in most circumstances it's at all likely, but if a company provided an individual with a second motor car, where more than one car is made available to an employee, the benefit of each car is simply, again, based on list price and CO2 emissions. So however many extra cars made available by the employer to the employee, we have the same basis of computing the annual assessable benefit. As we've already said, if you've merely had the use during the year of a pool car, no such assessment will arise. Now, again, I would recommend, before we go any further, for you to just pause for a moment and look through the note that we've got. Look at those levels of CO2 emission, then what is the percentage to use. Go back and look at the example that we had here, that if those CO2 emissions exceed 95 grams per kilometre, how it is, pardon me again, how it is that we work out the percentage to use. Pick up your figure, for us 134, round down to the nearest multiple of 5, that's 130, take away 95, divide by 5, because for each complete 5 grams per kilometre we add 1%, that is 7, so here we had 7%, to add to your benchmark figure of 14%, to be supplemented by a further diesel supplement of 3%, if indeed it was a diesel car. Check through that. Make sure that we are happy with it, Before then, we will proceed to look in example 4 at various calculations of the car benefit, any of which may be assessed on you in your examination. Okay, now feel free to have a go at these examples, these exercises here for the various employees within example 4 by yourself, but otherwise I will now take you through them. Right, the information that we pick up provided within the question. Obviously here we're interested in 2015-16 because we've been asked to calculate the taxable benefit for 2015-16 for each of these employees. Lewis, Nico, Fernando and Jensen and Sebastian here. Right, what do we then pick from within the question? Firstly, dealing with Lewis. Lewis provided with a new diesel-powered car. Why have we highlighted, underlined diesel? Because that means we're going to add 3% to any otherwise assessable benefit percentage figure. So it's diesel car provided on the 6th of August 15. That is within the 15-16 tax year, so it means once we've calculated the annual benefit, then we'll need to time a portion. We'll need to establish how many months has that car been made available to Lewis here within the 15-16 tax year. Had it been provided on the 6th of August 2014, there'd be no problem, because it would have meant for the entirety of the 15-16 tax year it had been made available. But where made available for only part of the tax year, we must time a portion. Remember, what we calculate is an annual benefit. What do you also need to know? The list price. List price £13,500. Now they may well have given you a cost as well. What we may discover in reality, of course, is that when you buy the car, you're able to negotiate some discount for the car so that the cost is actually less than the list price. It is the list price that we use. Now, an exam question is very likely to include the cost as well as the list price. As ever, of course, in such questions, the examiner gives you enough rope by which to hang yourself there. Don't take it. We want the list price. Now, of course, we do check to see if there's been any capital contribution made by the employee towards the cost of the car. No such reference here. We also check to see whether any contribution was required to be made by the employee to the employer each year for the benefit of the private use of the car. No such mention. So, we know it's diesel. We know that it's only available from the 6th of August 15, and the list price is 13.5. We also need to know the CO2 emissions. CO2 emissions, 122 grams per kilometre. Clearly there, 122 in excess of 95 grams per kilometre. Now I'll talk you through this, but you will need to do the calculations. So we have established the list price, that there is no capital contribution, therefore the figure to apply the relevant percentage is £13,500. The main work needed to be done is to work out now the relevant percentage. We know that because it's diesel, to any figure that we get, we will add 3% there. Once we've worked out the annual benefit, we will then have to time a portion. So what percentage are we going to use? Well, we see that 122 exceeds 95 grams per kilometre. So remember the basis now of the calculation you do. At 95 grams per kilometre, we would have 14%. Plus, we also know it's a diesel car, so it's plus 3%. Plus, these CO2 emissions exceed 95 grams. So what was the calculation that we performed? We rounded down the CO2 emissions figure to the nearest multiple of 5. 122 will round down to 120. By how much does it exceed the threshold of 95? 120 minus 95, and divide that by 5. The 5 grams per kilometre there, by which we will increase the figure of percentage for the CO2 emissions for each complete 5 grams per kilometre above the 95 cut-off level. Well, 120 minus 95, that is 25. Divide by 5 is an extra 5%. So what have we got? We've got 14% plus 3% plus what is now 5% here equals, in total, what does that come to? That's going to be what? 22%. Once you've got that computed, 22%, what do you apply it to? You apply it to the list price figure, £13,500. That would give you the annual benefit, but then we must time apportion because, as we saw here, it was only made available to the employee from the 6th of August 15. So from August 15 through to the 5th of April, how many, again we do it to the nearest month, but I'm giving you the 6 there to make life easier for you. How many months is that for which you had the private use of the availability of the private use of this car? From 6th of August through to the 5th of April 16, 6th of August 15, 5th of April 16, that will be, I think, 8 months, so you'll multiply that figure by 8/12. So 13,500 list price times 22% times 8/12 for the proportion of the tax year for which the benefit, the provision of the car, the benefit was available to you. Now, you do that calculation and please check that number out with your answer in the back, and that figure is what you'd then be adding in as part of your employment income assessment. So again, pause at this particular point before we move on and deal with Nico here. Okay, let's have a little look at Nico now and see how to deal with him. First thing we note, Nico presided with a new petrol powered car. So no diesel supplement on this occasion, it's a petrol car. Throughout 2015-16, so we'll have the full annual benefit. So immediately it's looking easier than the first example with Lewis. It's petrol, so there's no 3% supplement for diesel, and the provision has been throughout the tax year 15-16, so no time apportionment at the end of that calculation. List price of the car, £16,400. Again, probable you'd also be provided with the cost of the car. We don't care. It is the list price that now we use. And an official CO2 emission rate of 187 grams per kilometre. 187 quite clearly well in excess of 95 grams per kilometre, so we're going to have to work out what that increase above the threshold of 14% will be. So how do we do that? Okay, we know the list price 16,400. We've now got to work out the percentage. 187 is above 95 grams per kilometre. So again, you start with your 14%. There is no diesel supplement. There's no 3% add-on here. But what there is this supplement, given that 187 exceeds their 95. So what do? As ever, we round down to the nearest multiple of 5. So 187 rounds down to 185. Minus our benchmark figure, again, given in your rates and allowances page, 95, and divide by 5. What does that therefore come to? Well, 185 minus 95, that I think is 90. Divide 90 by 5, that's an extra 18% that now we add. So 14% plus the additional 18% will give us 32%. No diesel supplement, no 3% to add in. Plus, this is getting quite high now. Just remember that the maximum benefit will be based on a percentage of 37%. Well, we're not up to that level. This is only 32%, so it is that figure that you will use. So when dealing with Nico, therefore, what is the list price? The list price is some £16,400 here, and we will then apply to that £16,400 a figure of 32%. So work through, make sure you're happy with the Nico example, and establish the assessable benefit. Whatever that number is, remember, be added in determining the employment income assessment for our 15-16 tax year. Okay, on to dealing now with Fernando. What have we got? Provided with a new petrol, so again not diesel, petrol car throughout 2015-16, so it's a full annual benefit. List price £22,600 there, and the CO2 emissions, whoa, here we go, this sounds like it's going to be fun, 249 grams per kilometre. Fernando also paid speed merchants £1,200 during the 15-16 year for the use of the car. Now again, be careful. This is paying to the employer year on year. Here it happened to be the figure in 15-16, £1,200 for having the private use of the car. This is what we may call a revenue contribution rather than a capital contribution. It therefore will serve to reduce the assessable benefit. What it would otherwise have been will be reduced by the £1,200, such as we'll see in a moment's time. Alright, what do we do therefore? Now again, look at the list price, that is 22,600. It is that figure to which we must apply the relevant percentage. But look at the CO2 emissions, well above 95. So the same process. Round down 249 to the nearest multiple of 5, so that's going to be 245. Oops, that's not right. That will be, let's get it right this time, 245. Minus 95, divide by 5. Well, 245 minus 95 is 150. Divide 150 by 5, we will get 30. 30%. We will add that 30% to 14%. Equals. Well, that would be 44. So do we use 44%? Is that the figure that we use? No, I don't think so. Because, of course, we've got that maximum figure of 37%. Equals, we put the max cap in here, 37%. It would have been 44, but we cap it at 37%. So, how do we get the assessable benefit now? 22,600 times the 37%, the maximum cap. Work out that figure and then deduct from it £1,200. That contribution made by Carla towards the use of the car for the provision of that car in the year. We deduct that from the assessable benefit. Again, at this point, just pause if you would and check through with the model answer and make sure therefore that we're happy with this one before then we'll proceed to deal with Jensen. Okay, just before we do move on to looking at Jensen, just looking back again at Fernando for one moment, I just want to change one piece of information. Here you've been told that Fernando had paid speed merchants £1,200 during 15-16 for the use of the car. What you might have been told instead was that the £1,200 was a contribution towards the cost of the car, the original cost of the car. Now again, as I said to you, as I've said on each of these 3 examples so far, and will on all the others, the question will probably also tell you the cost of the car, but we don't care about that, it is the list price. Now then, if the employee makes a capital contribution, i.e. towards the original cost of that car, then that contribution, here 1,200, and up to a maximum we read, well, go back up and have a look at the information, up to a maximum of £5,000 would be deducted from that list price. So now, instead of multiplying out your 37% by £22,600, we would now have 37% times 22,600 minus 1,200. Well, 1,200 from that is what, 21,400 would that be? Just check that out again for me. 22,600 minus 1,200, I think is 21,400. And that figure would then be your assessable benefit. So instead of deducting the £1,200 at the end of the exercise from what the benefit would otherwise have been, if it is a capital contribution, i.e. towards the cost of the car, then that is deducted from that original list price, that 22,600 there, is deducted from that figure of list price, and don't know how a line's gone through that, deducted from the list price, and then you apply your relevant percentage to that. So do distinguish, please, between the capital contributions made by the employee towards the original cost, or as it was within this particular question, a contribution by the employee made each year to the employer in relation to having the private use of the car. Whereas we saw, and you've read through the answer now, in that answer it would be deducted from whatever the assessable benefit would otherwise have been. So do distinguish, please. Moving on, what have we got with Jensen? Petrol car throughout the tax year, so it's the full annual benefit. List price 16,000, all fairly straightforward so far. Most of the issues come down to the CO2 emission rate, but 90 grams per kilometre. Right, look back at your rates and allowances information, and in relation to that 90 grams per kilometre, you will see is strategically located between 76 and 94 grams per kilometre. And reading off your rates and allowances page, that tells you that we're going to use as our assessable percentage 13%. It's a petrol car, so what's happened to that 13? It's a petrol car here, so it's 13%. There is no don't know what's going on there. Why does it keep changing? I keep writing, we'll try it again, 13%, and it keeps changing. Another miracle of modern technology that I fail to understand. Alright, we will take 13%. Trust me, it is 13% based on the reading off your table, times what is the list price? I wonder what will happen to that now that I've done it. Oh, it disappears. £16,000 there. So 13% times the 16,000, it's a full year's benefit. That will be the assessable benefit. Again, check that out with the answer, please, and pause while you do so. I'll try and find out what's happening to this magic pen of mine here. It seems to be doing various strange things. We'll talk in a moment. Okay, well, hopefully you are now happy with the answer to the Jensen example there, and hopefully I've cured the problem with the pen so we can continue on together. So what have we got here with Sebastian? Look at that, hasn't changed there. Fantastic. Technical wizard, me. So Sebastian was provided with a new diesel car, so it could be plus 3%, throughout 2015-16, full annual benefit. List price here of the car is what? Oh, let me cross it out. List price of the car is £11,000, and the official CO2 emission 60 grams per kilometre. Again, well, hardly worth driving, you might think here, but 60 grams per kilometre. Check it out on your rates and allowances page. That falls between 51 and 75. So the figure that we would use there would be your base 9%. So with grams per kilometre, CO2 emissions 60 grams, that would be 9%. But plus, remember it was diesel, will be 3%, and therefore we will use 12% and apply that to the list price of £11,000. Now again, check through with the answer to that. Hopefully you're okay in terms of what we have just said, and rework back through all of these examples, making sure you're comfortable with all of the issues, those things that impact upon the list price and the things that then in turn impact upon the CO2 emissions, and how it is we work the percentage. And of course distinguishing in terms of contributions made by the employee to the company between an original capital contribution towards the actual cost of the car, which serves to reduce the list price for use then in every assessable year of benefit, as compared to a one-off contribution made in each year towards the running costs of the car because the individual has the private use of it and is required to make a payment to the employer to cover some part at least of that cost. That then would be an allowable deduction against what would otherwise be the assessable benefit. Okay, pause therefore and check through that or those exercises if you would, before again we move on together. Okay, now the calculation of the assessable benefit on the car that we have done basically includes all of the costs incurred by the employer other than in relation to the provision of fuel that is paid for by the company. So the car benefit that we've computed covers all the running costs of the car, but does not take account of any fuel provided for the private use of the employee. So when you are told in the question that the company paid for the maintenance and servicing costs, new tyres put on the car, new brakes, paid for the car tax, paid for the insurance of the car, none of those, though you'll be told how much it was involved in each case, none of those represent any further additional benefit. The car benefit that you have computed deals with all costs paid for by the employer apart from one, and that is the provision of fuel for the private use of the employee. So what happens if the company is paying for the private fuel? A fuel benefit is to be computed. Computed at, and again this figure is given to you on your fact sheet, your rates and allowances page, a base figure of 22,100 to be multiplied by the percentage that we used for calculating the car benefit. So whatever percentage you got, you simply multiply it by £22,100. This is a very simple calculation that follows on from the determination of the car benefit. The fuel scale charge, again, reduced proportionately where the private use fuel, let's just get rid of that, where private use fuel is withdrawn and not reintroduced again during the year. Where you have usually got to do a time apportionment is not for that. It is because the car was only provided to the employee for a part of that year. Either it was only given to him during the tax year, or it was removed from him or her, maybe they left the employment part way again through the tax year. Remember, they are annual benefits. So that fuel benefit, just as with the car benefit, is time apportioned. It's an annual benefit. Now there is one very important difference in terms of what we must do, and it's noted in this final point here. There is absolutely no reduction made in relation to the employee contributing towards the cost of petrol fuel, that is, whether it's petrol or diesel, for private use. If the employee merely, and notice the words, contributes towards the cost of the private fuel, there is no reduction in the benefit. It's not like where for the car, if you made a contribution to the employer because you have the private use of the car, whatever you paid was an allowable deduction against what would otherwise have been the assessable benefit. With the fuel benefit, it's an all or nothing. And that all or nothing means that if the employer pays for any part of the private fuel, there will be a full assessable fuel benefit. If on the other hand he or she pays for all fuel that is used for private motoring, there is no charge. If the fuel used for private use is all paid for by the employee, then there is no assessable benefit. Again, remember it, if the company is paying for any part of the private fuel, then there is a full assessable benefit in relation to that fuel. Again, remembering it's an annual benefit, therefore, if only made available for part of the year, then you'll only have a time apportioned fuel benefit. So what I need you to do now, therefore, go back to example 4 and calculate what now would be the fuel benefit for each of the individual employees. Only on this one, assuming also that Fernando pays Speed Merchants plc £600 during the 15-16 tax year towards the cost of private fuel. Again, look at what that term means, towards the cost of private fuel, although the actual cost of this fuel was £1,000. He's made a contribution towards that private fuel cost. So go back to each of those examples, starting off with Lewis. We knew what the assessable percentage was. We're going to apply that to 22,100, the standard fuel benefit scale charge given to you on your rates and allowances page. You'll multiply it out by the given CO2 emissions percentage. The only thing you've got to remember to do there, of course, is if the car has not been made available to the employee for the entirety of the year, then, as this is an annual benefit, you must time a portion. And as in the case of Fernando, where there is a contribution towards the private fuel cost, unless you are fully reimbursing, then the contribution towards the private fuel cost made to the employer is meaningless. There will therefore be no reduction in that assessable benefit. If he was there, he'd paid 600, the full actual cost of fuel, well, private fuel was 1,000. Had he paid £1,000, there'd be no assessable benefit, having only paid 600 towards the cost of the private fuel. Then there will be a full fuel benefit to compute. So work those fuel benefits, please, check them out with the answer, and then come back and we'll make a few further points just to finish off in relation to the benefit of these cars. Okay, just before we finish this particular part of the chapter, just want to have a little look at the calculations you've done and hopefully now check through, specifically in relation to Fernando and what was going on there. We know that in relation to the provision of fuel for any part of the private mileage of the employee, we'll calculate a full fuel benefit. How do we do that? Pick up the scale charge from the rates and allowances page, 22,100, multiply by the CO2 emissions percentage that we established when dealing with the car benefit. Now, because that's such a big number, we can see it's come out to an assessable employment income assessment of £8,177. Now, you imagine what effect that's going to have on the income tax computation of our taxpayer Fernando. Let us presume for the moment that our hero Fernando is a higher rate taxpayer. So as a higher rate taxpayer, that's an extra £8,177 worth of income going in, which times 40% would give an increased tax charge of, now what numbers did I get there? I worked that to £3,271. £3,271. Now that is your tax charge in relation to the fuel benefit. So because the company, the employer, is paying for some part of his private mileage, then he's ending up with an extra tax charge of £3,271. Now, if that was going to be the outcome, what advice would we therefore give to Fernando as to how to now reduce his tax liability, and reduce it by a significant amount? Remember, the only reason why that tax charge has arisen is because we've got this employment income assessment using our fuel assessable benefit. Why was there a fuel benefit assessed? Because Fernando was not reimbursing the employer for all of the private fuel. He was giving, as we circle there, 600, whereas the actual cost of that private fuel was £1,000. So think now, what would it be a good idea for Fernando now to do? And this can be done after the end of the tax year, before the assessments are agreed and the income tax computation sorted and the tax paid. All Fernando has to do is to give the company an extra £400. So at the moment he's paying 600, the actual private fuel is 1,000. If instead Fernando pays £1,000 to the company. So pays £1,000, that's an extra £400. Now, obviously, making an extra payment to the company you don't want to do. But the choice is, Fernando now pays £1,000 to the company, so that's an additional £400 over and above what he's already done. If Fernando pays that £1,000 to the company instead of £600, that therefore would equal no fuel benefit, because the company now would be paying for no part of his private mileage. No fuel benefit equals therefore no additional tax charge. What was that additional tax charge? There it goes, equals £3,271. So you think, what would you rather do? Pay HMRC £3,271 in tax. This is, again, I'm assuming he's a higher rate taxpayer. If he wasn't a higher rate taxpayer, it would be 20% charge, and therefore it would be half of that. But do you want to make that payment to HMRC as the tax charge on the fuel benefit, or avoid that tax charge by reimbursing the employer for all of the private fuel? What does that therefore mean? He pays £1,000 rather than £600, so an additional £400 on top of his £600 would mean there's no fuel benefit. So there's your choice. Pay the company £400 or pay HMRC £3,271. I think if I were Fernando, I know exactly what I would do. Much as it, again, is an unpleasant thing to do, to hand over a cheque to your employer, but I'd rather pay the employer £400 than pay HMRC £3,271. So there's something to be looked at in relation to the end of the tax year and what that fuel benefit may be. The actual tax cost of the fuel benefit actually might be more expensive than simply paying for all of your private fuel and avoiding, therefore, any fuel benefit whatsoever. Okay, something again to think about in relation to a planning problem. Okay, well, that brings this particular session to an end. Again, we're now well through our study of employment income, but we've got a few more things to look at yet. Well, let's look forward, therefore, to talking about those in our next session together.